Estamos en un momento de mercado muy complejo, con mucha incertidumbre, mucha volatilidad, en medio de muchos frentes abiertos. Por supuesto, algunos no cambian. La elevada inflación, la incertidumbre respecto a cómo van a actuar los bancos centrales para conseguir contenerla, el añadido de este año de la guerra en Ucrania y esa crisis en la cadena de suministro que llevamos arrastrando desde la crisis sanitaria. En estos momentos es más importante que nunca el poder atinar cuando hablamos de oportunidades de inversión. ¿Cuáles son los sectores que están teniendo un mejor desempeño? ¿De cuáles deberíamos huir en estos momentos? Nos vamos a acercar a la estrategia en dividendos de DWS y contamos con Denise Kissner, es Senior Product Specialist para DWS, para la gestora. Denise, thank you so much for having us a few minutes.
Thank you for inviting me.
Denise, well, we are in uncertainty moment in markets, but what is the DWS outlook for this year, considering inflation risks, the central bank's movements, and of course the war in Ukraine and the supply chain crisis?
Yeah, I mean, it's pretty hard to predict the equity market for the next 12 months, actually. However, I mean, after more than 10 years of a bull market, especially with growth-oriented strategies and double-digit capital gains, it's pretty hard to find value or to find even real returns in the equity market going forward. Yeah, and so as you already mentioned, it's pretty hard due to the fact that we have rising interest rates, we have higher inflation rates, etc. But we are quite confident that we are able to, let's say, that we generate positive real returns going forward, especially with more value-oriented strategies. As I said, after 10 years of growth-oriented market, I think now it's a good place to be in a more value camp.
It's been a decade of growth in equity markets, as you said, and dividend strategies are being positive during these years. And for this 2022, which is your main bet, no? When we talk about dividend strategies?
Yeah, I mean, dividend investing is not really a protected term. Yeah, so you really have to look into the strategies if they are more value invested or more growth invested. And with our strategy, we have a really value bias. Yeah, and so you see that also on our dividend yield in the portfolio. Yeah, we have an above average dividend yield of around 3.5%, which is around 1.5% above the broad equity market. Yeah, and with this strategy, yes, you are able to have a positive return year to date. Yeah, it's plus 5% currently compared to the overall market, which is negative, almost double digit. Yeah, and that gives you, as I said, a more conservative, more defensive profile compared to the overall market. And so, of course, investors, really conservative investors, like this kind of fund or profile.
And against the current backdrop of uncertainty in economy, many investors are wondering which is the best time to invest and in which type of investment fund. What returns can investors expect from this strategy?
I mean, it really depends also on their, let's say, on their own investment horizon, yeah, on their risk appetite, etc., yeah, and their overall asset allocation. But when I look into the dividend season year to date, it looks quite good, yeah, and also from the perspective that we have seen this shift, yeah, from growth to value. I think this traditional equity income strategy could be one bucket for your overall asset allocation to fight against, let's say, the high inflation, the higher rates, etc. And I think that could be one of a good solution for more conservative investors.
And regarding the DWS top dividend, this fund manages more than $20 billion of investors' assets. It invests in shares of listed companies considered blue chips. We talk about highly liquidity, stable, low-risk companies. Which are the main sectors you have in focus?
I mean that change over time, obviously, yeah, and it depends on the market environment. However, the backbone really of this strategy is really, let's say, companies which have a stable business model, kind of boring, I would say, yeah, a good balance sheet, yeah, and stable free cash flows. And so we are normally invested in sectors like healthcare, like consumer staples, regulated utility business, and kind of boring telecom companies. Yeah, so that's really the backbone of the portfolio, and then on top to have a kind of inflation hedge in this current market environment. We are heavily invested compared to the overall market into commodities, so materials as well as in the energy space. Yeah, so that's the second part of the portfolio, and then we are adding here and there some specialities. But overall, we are long-term investors, which means our turnover is pretty low, so around 20% a given year. So that means investor horizons around 5 years. Yeah, that's pretty long for an active manager, and so the fund is not really changing so much, or the overall asset allocation. And we're feeling quite comfortable with this current setup, and we are broad diversified also in terms of numbers of holdings. We have more than 80 companies within our portfolio.
So healthcare, consumer, avoiding boring companies, and which sectors we should avoid taking into account this current market scenario?
In our point of view, you should avoid companies which have a so-called long duration, which means predicting their earnings in the long future. Yeah, so cash is king, so to say, and balance sheet quality is king currently. So it's not really about the sectors in general. It's more about the companies which are not profitable. Yeah, in this market environment with the rising yields and this high inflation, you really look for more cheaper stocks, yeah, or quality stocks. And so please avoid maybe for the next couple of months or years companies which have a higher valuation.
Denise Kissner, thank you so much for having us these minutes. Y nosotros nos quedamos pues con esa oportunidad de inversión, poniendo el foco en ese fondo Top Dividend de DWS, una estrategia sobre todo centrada en capear el actual temporal que tenemos en los mercados, apostando por sectores como por ejemplo salud o consumo, evitando sectores que ahora mismo sí puedan verse afectados por esa creciente volatilidad, que no puedan hacer frente a los elevados precios, a los elevados costes ahora mismo para poder producir o ofrecer sus servicios.